Should we be worried about rising rates?
I think it really does, for me at least, it really comes down to what sort of a pace are we looking at these rising rates. I think, quite honestly, Mel, we had that big burst. We feel like we're somewhat pausing. If we get another burst, I think people will be a little bit, to some degree, have a little bit of fear in their hearts. But if it's slow and steady, I think that people are going to be able to embrace this for now. So it's been a nice run to the upside. Obviously, financials have really done well under the circumstances, especially as we've seen that 10-year get up to these 12 and 14-month highs, and that's been a pretty impressive run. So I don't think it's a fear factor, Mel, unless we really do see an acceleration to the upside.
Jenny, what is your interpretation? Because the markets really do seem, when we hit these sort of 13-month levels, these sort of milestones, there is a pause, it feels like, in the markets.
And that's healthy, to have a pause. I think we all like to see a rah-rah, go-go-go market, but that's not realistic. And so what we see is we see step functions, we see plateaus. Pete nailed it. He said it's all about the pace. It's also about the reasons. And the reasons why we climb closer to 2% or maybe even 3% are far more critical than the actual number of 2% or 3%. In theory, as we all know, interest rates go up in a strong economy because we're expecting strong future economic growth. So if that continues and if the reasons are right that we see a strong economy and interest rates step up in a rational way, we're going to be able to digest it and we're going to be able to handle it. And these lines in the sand that keep getting drawn, they'll keep being explained rationally if it happens at the right pace with the right reasons. And I'm pretty comfortable with it.
Go ahead, Jenny.
Just one interesting thing that I've been thinking about is, I manage this dividend income portfolio, and usually the dividend stocks get hurt when rates are going up. But what we've seen lately is quite the reverse, right? We've seen the tech stocks getting hurt as interest rates are going up, and the value stocks or the dividend stocks, they've actually gone up while interest rates are going up. So I think it really shows that so far interest rates are going up for the right reason, which is resumption of normal risk return, resumption of decent economic growth factors driving companies.
Yeah, I was going to say when I interrupted Jenny by accident that the reason is very important, Jim. The reason behind this is presumably, as Jenny had mentioned, economic growth that has yet to come, or an earnings bounce back that has largely yet to come. Are we baking in a lot, Jim? And does it concern you that the consensus view on the street seems to be at this point that there will be a very robust recovery, not allowing for missteps in this reopen?
Well, so the direct answer to your question is no, I am not particularly worried. Looking at S&P 500 earnings around $175 to $180 a share this year, maybe $200 next year. I think those are reasonable, to answer your question, based on the amount of fiscal stimulus, monetary support, and then, of course, the vaccines reopening the economy. As a sailor, I'm always looking at the horizon and seeing what storm clouds may be coming over the horizon. I do think there's one thing we need to pay attention to, and this is to your question about are we baking everything in, is we are going to hear more and more about infrastructure spending and taxes going up. Infrastructure spending should be a positive for industrials, energies, materials, et cetera. But taxation going up in general is not a positive. And we need to just keep an eye on the next few months as this legislation comes together on the degree to which taxes are going up. Because that's really the only thing, as I look at the horizon, that's the only thing that's worrying me.
Sailor, farmer, I can't keep track of you, Jim. You're all over the place there. In terms of tax policy, what concerns you the most? Is it a personal income tax or is it a rise in corporate tax? And are companies largely prepared because that was in Biden's platform when he was running, though? So
you're right. It was in his platform. And I just want to repeat this because this is important. It's a question of the degree. Now, of the taxes, the one that probably worries me the most is corporate taxes because that affects U.S. competitiveness elsewhere around the world. If the U.S. corporate tax rate goes to 25%, I think we're going to be fine. If it goes to 28% or higher, I think we've got to worry about things. Next on the list is capital gains, because if you get a big hike in capital gains next year, you could see some selling this year as people try to lock in lower capital gains rates. I'm not saying head for the hills, not by a long shot. I'm invested happily. I think the future is bright. But again, I'm just looking at the horizon, and that's the one thing I've got my eye on.